All right, let's get right into it. If you're watching the day-to-day price action, you're missing the much bigger picture. You're missing the legal framework that just gave the green light for a major institutional liquidity shift.
You see, the window for early institutional positioning on ISO 2202, that's the new global standard for financial messaging. Well, that window is closing fast. And look, that's not some kind of prediction. It's simply a function of the new regulatory timeline that's now in place.
And while a lot of retail investors are getting distracted by all the noise, the Federal Reserve has gone ahead and officially released key integration data. This isn't just speculation, This is documented market structure we're talking about. So in this explainer, we're going to break down that official timeline. We'll focus on the regulatory signal that started it all, the market data that resulted from it, and of course the profit motive that's driving this whole thing. The goal here is total clarity, so you can see the institutional allocation for what it is and position your own portfolio accordingly.
Okay, topic number 1, the 2026 regulatory framework. This is the absolute foundation for everything else we're about to discuss. This is the signal that really kicked off the market action we're seeing right now.
So let's talk about what's being called the stay signal. Essentially, Ripple and the SEC jointly filed to pause any judgment penalties all the way out to July 2026. Now, this is absolutely critical. Think about it. You don't pause a legal fight unless you're trying to clear the runway for business. This move removes that immediate regulatory cloud, and it gives Wall Street the precise window it needed to start migrating assets without taking on unnecessary risk. The media might be calling it a delay, but for institutions, this is the green light they've been waiting for.
Which brings us right to topic number 2, the ledger migration data. Because while the lawyers were busy pausing the case, the on-chain activity has been showing a very significant response.
So, what is the market response to this newfound regulatory clarity? Well, let me tell you, the data could not be clearer.
The market's response has been nothing short of an explosion in what we call real-world assets, or RWA, being tokenized on the XRP Ledger. The growth rate for these assets in 2025 alone was a staggering 2,200%.
Now, let's look at the hard numbers behind that. The value of these tokenized real-world assets on the ledger shot up from $25 million to $568 million in a single year. And the institutional projection for 2026, $6 billion. That kind of growth is what real price discovery is based on. And you'll notice the projection for RLUSD, that's Ripple's upcoming stablecoin, is already at a $1.4 billion market cap. This isn't retail hype. This is the new banking rail being built right now under the safety of that.
Institutional updates like this move incredibly fast. You should subscribe and hit the bell to make sure you're getting this research before the rest of the market has a chance to react. We track the filings that signal exactly this kind of adoption.
And because this kind of data moves even faster than a full analysis like this can be put together, you can get the raw reports the moment they actually drop. Just scan this QR code right here to join the Telegram newsfeed for those immediate updates.
All right, so we have the regulatory green light and we've seen the market's on-chain reaction. But what's the real economic driver here? What's really pushing this? Well, at the end of the day, it always comes down to the institutional cost-benefit.
To really get a handle on the incentive, just look at this. Franklin Templeton, we're talking $1 trillion asset manager here, stated in an official report that just moving their assets over to blockchain rails saves them $200 million a year. And that's just in reconciliation costs alone. That is a massive operational savings.
And here's the core of that savings model. A breakdown from that same report showed that processing 50,000 transactions costs $50,000 on traditional rails. On blockchain rails, that cost plummets to just $120. I mean, when you see a cost difference of that magnitude, the migration isn't a question of if, it's a question of when.
So the single most crucial point to take away from all of this is simple. The 2026 stay is not a waiting period. It is a migration period. This entire institutional shift is happening because of a perfect storm of 3 factors. You've got the regulatory clarity from the stay, you've got the massive operational cost savings we just saw, and you have the first mover advantage for these institutions in asset tokenization. They are moving their assets now to capture these efficiencies. Now, this migration period, it directly informs the market structure for the Ripple IPO, which is being targeted for late 2026. I actually break down my entire IPO valuation model based on these RWA flows in the analysis right here.
And that valuation model, it's heavily influenced by another key factor. There's actually a third asset class that's driving these incredible institutional savings. You can click right here to see that full analysis.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.